On one hand, Indian stock market indices are nearing record high, and on the other hand, shares of the biggest insurance company of the country, LIC, is declining. After a poor listing, investors are waiting for improvement. But there has been no improvement. With every passing month, LIC shares are declining further. It is regularly hitting new lows. At the onset of current financial year, there was a lot of pomp and show around the LIC IPO. Conditions were being created for the issue to succeed, and roadshows were done to attract investors. Specifically, retail investors were encouraged to invest in the IPO. But LIC disappointed the investors from the beginning. As per the figures, confidence of retail investors in recent times have come down. Just in the second quarter, 2.65 lakh investors have exited from the share. The way in which the price of LIC shares have fallen, this stampede among retail investors seems justified. In LIC IPO, issue price for retail investors was 904 rupees, while for policy holders it was 889 rupees. For common investors, the issue price of LIC IPO was 949 rupees. But on 17th May, it listed at 872 rupees. This meant that from day one, LIC investors were facing losses. On Friday afternoon, the share was trading at 585 rupees on BSE. Prior to that, it has touched its all-time low of 588 rupees. However, there are a few retail investors that are using this opportunity to buy on dip. As per the figures, retail investors held 11.86 crore shares in LIC at the end of June quarter, while in the September quarter it reached 12.21 crore. This means that in 3 months, LIC investors have bought 35 lakh shares of LIC. During this time, FPIs have also shown their confidence in shares as they have bought 33 lakh shares, while the confidence of mutual funds have declined and they have reduced their holding by 0.1%. If we look at future outlook of LIC shares, despite poor performance by the company, the brokerages are bullish on it. Foreign brokerage firm Citi has given a buy rating with target price of 1000 rupees. Similarly, Motilal Oswal has given a target price of 830 and MK Global has given a target price of 800 rupees to LIC. The company's business has also impacted the share price in the open market. Looking at its business, the margin of the company is worse than its peers. This margin was 15% in March, and in the June quarter it has slipped to 13.6%. If we look at other companies, for example SBI Life and ICICI Prudential, this ratio is above 30%, while for HDFC Life this margin is around 27%. Talking about the government, Deepam Security, Tuhin Kant Pandey recently said LIC has to do new things to gain its footing in the market. He agrees that company's management has to think from a different angle. Listing of the share began a new story, and now LIC management has to make a strategy for 20 years.